Melinda, where no listener is ever left behind.
You're listening to an encore presentation of this program, KCAA, the Inland Talk Express.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, for listening to us. We come to you each week. If you want to see the show, we've been shooting this show for a decade, and you can go to YouTube. Jeff Barton, the Mortgage Voice, is on YouTube, and there you can not only see this week's show, but you can see past shows and see the trend that's really been happening through COVID, beginning of COVID till now. It's extremely volatile in terms of both the rates, availability of product, and what is happening on the worldwide economic front that would probably cause you some anxiety if you went through all that in one day. So week by week, we do the show. Go there, Jeff Barton, the Mortgage Voice, and you can see what is happening. We're also on a number of different podcasts, and we're on websites and all different things, which we'll get to a little bit later in the show. But again, I am Jeff Barton, and this is The Mortgage Voice, and thanks very much for tuning in. KCAA does a great job bringing us to you in the Inland Empire and parts of San Bernardino, Riverside counties, as well as LA and some Orange County, and certainly out in Palm Springs up to 15, going all the way to Vegas. You can hear us again and again, show after show, talking about real estate, talking about mortgages. And mortgages currently are on the downside. We've seen some really, it's very frustrating in our business. And one of the reasons why is because we went through this patch, this long period, year and a half, 18 months, where rates were just unbelievable. And they had been trending down actually since COVID began, down to where we were at 3.5%, and then all of a sudden, a year and a half later, we're at 7%. And that's the frustrating part, because I can't tell somebody who just got in the mortgage business that, hey, 7% is really not that bad of an interest rate. And they're like, wow, what are you talking about? It was 3% a year ago. And that's true. What happens is markets tend to settle after things in a catastrophic way, which I would call this rate hike a catastrophic way. They settle once the market gets used to that particular product. For instance, driving around today, had to come into the show to record, and by the way, we're in a new studio, and it's a tremendous upgrade from our last studio. I feel really luxurious. Daryl, you too, right?
Oh yeah, it's nice to be in either seat, drivers or passengers.
Yeah, it's great. But driving up here, I had occasion to go in and get some gas. Now, I don't know if you follow gas prices, but the root of gas prices when they go up is always, oh man, you know, the scarcity of product, they shut down refineries, the oil, people in the Middle East are jacking up the prices. All of these reasons given to why, we're paying $6 at the pump for gas. Well, what happened? We're at below $80 a barrel of oil. There seems to be no refinery shutdown, yet here in Southern California, we're paying what we were when all those other things were happening. I think it was $5.59 a gallon. I was like, you got to be kidding me. Nothing makes you more aggravated than feeling ripped off. Don't tell me that doesn't aggravate you too. It's just infuriating. So as a result of no control over gas prices driving out here, this is kind of like what we're dealing with in the mortgage world. I can't tell you that $6 a gallon of gas is normal and you get used to it. Nobody's ever going to get used to that because it's never been this high. But in mortgages, yeah, we've had 7% before. And I think we're going to stay between 6 and 7% pretty much for the entire year. I think there'll be some volatility. I think at 1 month or 2 months in a row, you might see 6.25, 6.50. We're currently, let's just look at this, 6.91 for the 30-year fix today. That's high. 3 weeks ago, we were at 6.5. So it cost you today a half a point more than it did 3 weeks ago. Is there a reason for that? No, there isn't. What there is are several different items that people in lending money who look at risk differently than you and I who are borrowing the money, And what are those things? Okay, so the things that affect mortgage interest rates, we'll call this little section. And the things, there's 4 of them. And it's pretty straightforward. You've all heard me talk about all of these items before, especially in the way they're going to affect you, your mortgage, your decision-making process, how you feel about things. And all of these things are usually not done in a vacuum, i.e., I don't make the decision for my family. No, we all make it together, and we all are affected by these 4 different things equally, but at different levels. For instance, employment. That's number 1 on the list. It's going to affect me differently than it affects my wife, my kids, and the other people who live at my house. I'm working. I have control over my employment. I work for myself. And I've prepared for the next level of, when I get older, what I'm going to do then in order to earn money. So my employment issue is a non-issue. But for many of you out there, you work for somebody else. Somebody else has taken on that burden of keeping the doors open for the business. You're just showing up for a paycheck. Now, no, that's simple. But when you're looking in terms of paying for a mortgage, qualifying for a mortgage, being able to say, hey, here's what I make on a weekly basis, have been making it for X years, will be making it for X more years, that employment and that weekly paycheck, yeah, that's why you go to work, so that you can create personal wealth through home ownership. And that's the main purpose of buying a house. So employment, what is employment doing today? Well, the employment numbers are better than they thought. There are more job openings this month than there were last month. Remember last month we were talking about, okay, so the job openings going from 11 million to 9 million or whatever the number was means that, okay, the economy is slowing down. We were talking about layoffs in certain industries and the pending issue problems to come. Well, this month we have 10.1 million job openings. That's gone back up. Was it 9 something? Now it's 10.1. So this tells you that employers are still looking for people. And with that number of job openings, it means that if you switch jobs looking for a job or go get a new job, you're probably going to be making more than you did at your old job because there's so much competition for you as an employee. And that's a good thing. Number 2 on the list, GDP growth. Now, GDP growth doesn't affect you or me, really doesn't. What it means, however, is the companies that lend you money are not battening the hatches. What does that mean? They're not like screwing down the ship doors so that the water doesn't get in. If you're taking on water as a company, it means you're losing money. Now, most people in the mortgage industry, brokers especially, are losing money. Now, a lot of lenders have merged, been bought out, or closed, and that's true. And that happens every time we get into a situation where each loan you do, you're losing money. We talked about it 2 weeks ago. About $2,000 per loan is what the major United Wholesale, Quicken are losing on each loan. So that weighs heavily on them. And in regards to how it affects you, GDP growth, meaning that it's between 1% and 2% right now, is a good thing. Means they don't have to batten the hatches. Means that the lending standards aren't going to get tighter than they already are. Number 3, inflation. Inflation, now, okay, so inflation currently is at 4.7% year over year. It's not great, it's not horrible, it's like the gas story. It's just something you can't do anything about, but it affects you directly because things cost more. Now, I've always been of a mind that says people are greedy. If they can raise their price on something, they're going to do it, even if it has nothing to do with the cost of labor or the cost of materials. It's just the greed that we all seem to have. And I think inflation at this number is basically that. I think we've already come through the pandemic issues, and really inflation itself, that's a personal issue that you're going to have to make a stand or with your company, or as you see how you're going to attack making more money, that's really why you're going to do it, because of the inflation. And the last one is that debt ceiling. Well, we're waiting on the vote, and the vote will be happening, and we will be getting a debt ceiling. If we didn't get a debt ceiling raised, would have had higher interest rates, scarcity of loans, and a whole bunch of other things that wouldn't have been good. However, we're looking at a vote, and we're looking at an extension of that debt ceiling. So those are the four things that we're looking at that are affecting how you're going to attack your mortgage needs this summer. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Appreciate you listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
I'm Jeff Barton. This is The Mortgage Voice, and thank you very much for tuning into the show. Okay, we turn to the world of politics a little bit right now. Joining us is a campaign director for Stanley Ng in New York City, the city council race there. One of the reasons I bring Cooper on is to talk a little bit about some of the things that are concerning in politics in that area of the country and how it might affect some of the housing there, because I think all housing decisions are made politically first, and then it trickles down to what we do, whether it's in the permitting process or whether it's in Section 8 housing or a number of other issues. Anyway, joining me now is Cooper Barton. Cooper, how are you?
I'm good. How are you, Jeff?
I'm fine, thank you, and thanks very much for coming on.
Yeah, no worries.
Okay, so first off, tell us a little bit about your candidate, the job you're doing, so people get a little bit of an idea as to what that is.
Sure. So I'm what's called a campaign manager. I'm running a campaign for a city council candidate running in New York City. His name is Stanley Ng. The district, the city of New York is divided into 51 or so districts. It's like its own little mini Congress for just the city of New York. So
Right.
there's 51 of these districts. We're running for the 43rd City Council District, which is in South Brooklyn. So if you're familiar with the area, Sunset Park to Bath Beach.
Okay, and in this race that you're running, the campaign director job, campaign manager job rather, is all-inclusive, right? I mean, you're sort of wearing many different hats?
Sure, yeah, absolutely. It's definitely, like you said, it's a jack of all trades kind of job. You're doing anything from making phone calls to, registering people to vote, to, doing outreach, to doing media tours, to doing interviews, all that sort of stuff. So it's kind of a one-stop shop for running someone's political campaign, see if they can make it into office or not.
Okay, so the country itself, now we always focus on the larger presidential or senatorial or congressional seats, but really it's
Yep.
a lot of smaller political races, and a lot of smaller races are really what runs the country. I mean, the issues locally. We talked a little bit off air about some of the housing issues facing New York City. Give us an idea of what that is, what the scope of your particular campaign, how you're handling some of the issues that come up in the housing area.
Sure. I'm sure, like it is in Los Angeles, housing is extremely expensive in New York City.
Right.
Whether you're a renter or whether you're a homeowner. So a lot of the times, people who live in New York City obviously can't afford to buy a home. They're renting from a large corporate landlord, or they're renting from a small mom and pop shop who's got maybe 3 or 4 or 5 tenants. Right.
Okay.
The thing about go ahead.
No, go ahead. I'm listening. I'm just sort of.
No worries. So the thing about this district is there's a lot of 1 and 2 family homes as well as multi-unit duplexes. So an issue that comes up a lot for our residents here is property taxes.
I see.
New York State has one of the highest property taxes in all of the country.
What is it? Do you know?
I don't know offhand. I do know it's in the top 10% of property taxes in the country. But yes, it is definitely up there. It's one of the highest in the country. And on top of it, there's a city tax as well. So you have to pay a state tax plus a city property tax.
I see.
Very, very expensive to own a home in New York City. So a lot of the issues that tenants and people who own homes bring up is the price and cost of housing. So property taxes is a big issue, but also rents, just struggling to pay rent every day and every month. It's not easy, especially if you want to live in one of the biggest cities or the biggest city in the country.
Now, when you're talking about the two different things, right? One is expanding the ability to rent, i.e. we need more rental units, and the other one is building new housing for single-family housing, or and is there land there? Is there the ability to do any of that? How does a candidate handle that in a race where they're talking against somebody else who has a different idea.
Right. So there is definitely a problem in South Brooklyn, especially with land use. There's not a lot of extra land to build new buildings, and it's actually a hot button issue for a lot of the residents here. They did want to build a new development in Sunset Park. A lot of the residents were against it because they kind of like the lower density, more spread out nature rather than Manhattan, where you got these skyscrapers everywhere.
Right. Right. So
it's a toss-up between trying to, provide more affordable housing, but also keep the residents who live here happy and with the way that, buildings and the way that housing is constructed. So it's a tough act to, kind of walk and talk, but basically what we're thinking in our campaign, we're talking about adding more Section 8 housing and more NYCHA buildings, basically low-income housing for New Yorkers.
Well, in that, and this is going to segue into my next topic, which is housing homeless, because that here in San Bernardino, Riverside counties, as well as all the big cities in California, and I'm sure in New York City, as well as many, many places around the country, that's all I hear is people that live there hate it, and then, of course, you've got this population that doesn't have any place to live. How do you solve a problem when you've got locals saying, look, we don't want to build any more houses, yet the need is so strong? What is Stanley's position on that?
Yeah, like I said, he wants to expand the number of Section 8 housing and Section 8 apartments. Also wants to expand NYCHA buildings. Basically, there's a program in New York City where there's affordable housing run by the government. That's what NYCHA is. Okay. Basically, if you add more apartments under that umbrella, you can have more rent-stabilized apartments. However, the one difference, at least between, LA County and New York City, is that we have a right to shelter law. So every single person is entitled to the right to stay at a shelter. So that's a big issue when it comes to people saying, no, I don't want a homeless shelter here. So it's similar in that they want to drive, homeless people out, but not necessarily for the way that it is in LA County, where you might have an encampment. Here, there's shelters, and a lot of people are against building shelters in certain areas.
I see. Okay. So, yeah, that's a different way to handle it, because I was wondering about that. In the political context, obviously you're running for votes of people who live there, but at the same time you're also trying to set a vision, whether it's a vision of, helping everybody, and that is the government's job, i.e. the candidate would say, hey, this is a good idea because we would be not only helping people but getting people off the street, yet people not wanting the NIMBA kind of thing, not in my backyard. Right. And handling that, like you said, is a tightrope issue, right? You have to kind of walk a fine line.
Yeah, it's tough, especially in New York City. But we're kind of running a campaign where we listen to the constituents, and that's what they want. They want a certain way that's preserved and to have the certain housing that they've always had. So it's tough, but you still want to do what you can to address housing need. And yeah, I think expansion of Section 8 here in New York City and NYCHA is definitely a way to do that.
Okay, excellent. Let's do a little bit of a shift. When is the election? I mean, obviously you're in a campaign right now, so describe to us a little bit about the timeline till you get to see whether your candidate wins, Stanley wins, or not.
Yeah, absolutely. So basically, yes. So this is the Democratic primary for the city council races here in New York. The primary election is on the 27th of June. Early voting you can do in New York City. You can go to the polls early and vote. I know in California they have vote by mail, especially after the pandemic, where you can submit an absentee ballot. New York, the way they do early voting is basically to show up the polls, a week early. So early voting starts on the 17th and it goes to the 25th of June.
Okay, excellent. And what kind of turnout do you have at these things?
Yeah, so that's one thing we have been noticing is because since it's an off year, 2023, and the midterms were not even 6 months ago, a lot of people are kind of turned off, and they're kind of like, I'm done with voting, I voted already, why do I got to go again? Right. So that's definitely a struggle. So, in an off year like this, it's hard to get people to vote again because, like I said, the midterms have just happened in the last 6 months. So it's definitely a challenge.
Oh, I get it. Hey, listen, we're up against it. I appreciate you coming on. I really do, because it's an interesting perspective given the fact that L.A. and New York City are two of the largest cities in the country, and they approach some things a little bit differently, especially on the housing end. But from my standpoint, really appreciate you coming on. Thank you very much.
All right. Thanks so much, Jeff. Appreciate it.
Okay, and that's Cooper Barton. He is the campaign manager for Stanley Ng. City Council, running for the City Council seat in the, I think, 43rd District. Appreciate him coming on. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, for listening to us, for putting up with us for any number of years, 9 years, hundreds of shows. If you want to see any of these from the past, go to themortgagevoice.com. And also, you can go to YouTube, Jeff Barton, The Mortgage Voice. Those two places are great places to see and hear what we do weekly. We try to give advice, but mostly present what's happening out there, and then try to give you solutions by bringing guests to the show who know way more than I do about anything in the industry, and that, again, is happening. Today, we have Charles Giscombe with us, who is a manager of our real estate mortgage shop out in Las Vegas for Malibu Funding. He joins us again. He's been on the show many times. We love having him on. He's got great information. Charles, how are you?
Great, Jeff. Thanks for having me again today.
Thank you very much for coming on the show. Okay, describe to us a little bit quickly about how the market is and where your place in it is. Are you selling? Are you negotiating? Are you waiting? Where are we?
You know what, Jeff? I am continuously doing business.
Okay.
And the reason why is because we have a plethora of mortgage products that we probe our clients for and make sure and find out which lane or box they fit in. If they're not going to fit in the traditional box, there's always another mortgage that they can get into, which might be a non-QM mortgage. If they're looking for more investment, Jeff, we give them in a commercial renovation type loan. There's all types of loans for all types of individuals. So when the market is, obviously the rates are increasing, looks a little bit frustrating, and some people have some fear.
Yep.
There's always other products that you can get them into that will satisfy a need. Like I always say, you can't get a traditional mortgage, but you might be able to get a non-QM mortgage, Jeff, that will provide you a 40-year instead of a 30-year, something along those lines that will obviously offset the higher interest rates, allow you to still write a decent monthly check so it's not too much, and will still allow you to take advantage of these steadily holding values in the particular areas and states that we're in.
When discussing all of these finer points of what we do in the mortgage business, a lot of these customers that we have are just not sophisticated. Not only not sophisticated, but they don't know the language. They don't really know, what something might mean, even though they're smiling and nodding and they have no idea. What do we do to really assure these people that not only what we're saying, but to give them an opportunity to look at stuff or listen to it again to make sure that what they're hearing and seeing is the same thing that they're going to hear and see when they're by themselves and looking at it, to make sure they want to do or not want to do what we're talking about?
Well, Jeff, that's a great question, and it's truly one of the most important parts of what we do.
Right.
Not to talk about any particular banks and names, but the larger banks, at the end of the day, they're used to accepting or receiving A paper. And if it's not the best of A paper, sometimes they don't have time for it.
Right.
Well, Jeff, everybody's not going to fit in the A paper box. And this was one of the things that interested me and intrigued me so much when I first came to Malibu Funding. It was that we may not be the lowest interest rate, but we'll take the most amount of time. It's almost like, hey, listen, was Albert Einstein the smartest guy in the room, or did he just sit in front of the problem longer than everyone else?
Right, right.
We just so happen to sit in front of the problem with individuals because we know when they go other places, they may not get this kind of attention. And it helps us sharpen our game in the industry when we are very knowledgeable and we take the time out to figure it out. It also helps the client, I like to say, earn while they learn. And that way it's not just somebody pushing them through a process and talking to them about information they have no idea about, but taking the time out and saying, this is what we need and this is why we need it. This is why this won't work, and this is why this will work. This is what an FHA loan is compared to another loan, and explaining. So that this first time, you're educating them, getting the deal done. Also, we're gaining trust with these individuals that will now say, when you, and I can count on them because they weren't just rushing me through the process. Those are all the things that we always talk about collectively. They're all the things that I would tell any loan officer that I work with or that works with us, or that I'm a team captain for, or whatever it may be. It's just that taking a little bit of extra time will not only get you more trust from your clients, it will inevitably get you more clients.
A great answer, and I agree with it 100%. I mean, taking time with people to be able to not only provide them with the information, but also giving them the opportunity to walk down the path with you so that they know really what you're talking about. Because as you said, in many, many different scenarios, when you're dealing in time frames and rushes, and I'm dealing in a situation on a particular loan where the information that is needed is not supposed to be gotten by me. There's always a chain by which this is supposed to happen, whether it's an appraisal, whether it's some kind of underwriting guidelines, whether it's, whatever it is, people have a job and you have to give them space and time to do that. But occasionally you have to jump in and say, hey, look, this is what I need. This is how I need it. And if you can provide it ASAP, that would really help the loan along as quickly as possible. And to be able to do that
Jeff.
without always having the house on fire is really the fine line that we play as mortgage professionals.
Agreed. It's always a fire drill for us, but at the end of the day, it's our job to put the fire out, take the doubt out, take the worry out. And we have to always acknowledge, Jeff, that this is the largest financial transaction that will ever occur in most of these individuals' lives.
Yeah.
So you don't want to rush someone through that because there's a lot of fear, disappointment. It's a lot of embarrassment because a lot of folks are embarrassed that they don't know this information. And you have to let them know, hey, listen, it's nothing to be embarrassed about. We do this every day, so it's easy for us. Some people might make a transaction like this, Jeff, once or twice in a lifetime.
That's right.
So at the end of the day, you have to just be mindful of it and make sure you take that into consideration when you're speaking to people on their finances, on their credit structure, what they do and don't have. These are all things that you have to be very mindful of and handle with kid gloves. I see it in Malibu. That has just been our culture and our environment. I'm super appreciative to be a part of a team that understands this all across the board.
Tell me a little bit about programs. I mean, you touched upon it a little bit earlier, and just talking about non-QM versus standard loans out there in the marketplace. But what's popular right now? I mean, what do we see is working for people?
You know what, Jeff? A lot lately I have been seeing is, I have to say this, is the path of least resistance.
Right.
The path of least resistance only means it's the loans that don't require the same financial documentation and structure that you normally would have. In a normal transaction, Jeff and I and all of our other loan officers and processors can say it in our sleep. A traditional loan needs 2 years W-2s, 2 years tax returns, 60 days bank statements, 30 days paycheck stubs.
Right.
That's the norm. We can all say that because we know what a traditional loan needs. But there are alternative situations that don't require that provide documentation that would take the place of those things that are a lot easier to get, like 12 months bank statements,
right,
or a CPA letter, or a profit and loss statement. These are other alternative documentation items that can take the place of the W-2s or the paycheck stubs or the tax returns. And if you are an entrepreneur, just putting 12 months of bank statements up and showing how much you make on an average of 12 months can act as your income. In most cases, it will make your DTI drop, meaning your debt-to-income ratio be lower because it's the raw number that is going into your account as opposed to the tax returns that are the chopped numbers that you have to do when you're doing your taxes. It's just an easier way for individuals to qualify. And it allows the underwriter to see that these individuals have the ATR, which is the ability to repay. As long as you can show the ability to repay and that you have a solid structure in regards to monthly income, there's a reason for you to get co-qualified for a loan. That's a loan. We also have renovation loans for individuals that are doing investment properties.
Right.
These are stated loans, taking us back to the 90s, Jeff, and
Right.
where we were doing, stated income, stated asset. As long as your FICO score was strong and can show that you're going to lease this out, as long as the value of the home was going to be there, these are loans that are weighted heavily more on the asset, which is the property itself, more so than the borrower. And when you have that situation, that's a great situation for someone who does not have the traditional financial structure to qualify for a loan as well.
Listen, we're up against it. That was fast 10 minutes, but could you shout out a way by which people can get in touch with you, especially if they need someone with experience and the care to be able to get the loan done?
Absolutely. You can reach me at that good old 702-328-5191. That's 702-328-5191. Or you can reach me at charles@malibufunding.biz. That's charles@malibufunding.boy. Isaac Zenith.
Excellent. Thank you very much, Charles. I really appreciate you coming on.
Thanks for having me as always, Jeff.
Thank you. That's Charles Giscombe from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. Be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to listen to us each and every week. We bring to you mortgage information, real estate information that you're going to need to make decisions. Best decisions are those that you can take your time, you can interview, you can shop around. Does that sound like anything of reality in anybody's life? The answer is absolutely not. We're all rushed to the nines. I got to pick this one up. I got to drive over here. I got to get to work. I got to, look for a house. It's a rushed world. And part of what we try to do on the show is provide you with the information so that you don't have to go out there and find it. I have no agenda here to try to sell you anything, but I can provide you with the information and the relaxed atmosphere by which you can listen here on the radio or any number of places that we are. We're on YouTube, Jeff Barton, the Mortgage Voice. That's our website. And if you want to hear us on our, podcasting, you have a list of those again, Daryl?
I think I do, Jeff.
Great, thank you.
Apple Podcasts, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, and Podclips.io.
Excellent. Also, the KCAA website, if you go there, they have archived our shows for the, 5 years we've been on it, maybe even longer. I tend to lose track of the time because as in our world, here in the mortgage world, it's like that out there in the real world. Things go by fast, and man, I tell you, COVID, think about COVID for a second. It seems, right?
Well, what it did, there's like 3 years missing out of the timeline.
Right.
Say, I talked to him 3 weeks ago. It was a year and 3 weeks ago.
Right.
It was 2 and 3 weeks.
That's exactly the way I feel about it. And when I think COVID, I think ancient history. Of course, anybody that has a mortgage today that they got during COVID is so happy. But think about it. It was not that long ago. I mean, it's like yesterday. But really, in terms of, are we back to normal? Yes, the traffic is terrible. So, yes, we're back to normal. Anything, Daryl?
I think that the traffic's been horrible recently.
It's awful.
I think it's like everybody everybody thought it was going to change our lives forever.
Right.
Probably did, but people tend to ignore that when you go forward.
Exactly. It's like when 9/11, when you go to the airport and all the security you have to do. Do you remember a time when you didn't have to? Anybody could walk up to any plane, any place in the United States, and just stand there and wait for the people to come off the plane, right? But it happened so long ago. It's so much part of our lives that you don't really think about it anymore as a problem. It's just part of what you do when you got to go to the airport. So if you're getting a mortgage and if you're taking that application right now, there are a ton of questions that I have to ask you. There are a ton of documents that I need from you. Yes, the process is simpler than it used to be. Yes, the mega lenders, i.e. United Wholesale or Rocket, both of which are wholesale in nature, i.e., yes, they have retail departments, but most of the business that those two large lenders get come from companies like Malibu Funding. And my 100 and some odd, whatever it is, loan officers in the 15 states we're in will get your information, input it into their platform, and they will spit out whatever we need in order to get an approval, whatever we need in order to get the funding, whatever we need in order to close. Those behemoths are the ones driving the business, and those of us on the retail end are collecting the information. So although it seems as if, yes, it's never ending, and yes, it's sort of tedious, the end result is alone a decision very quickly. The automation that's been added to what we do in the mortgage business over the last 5 years and the next 3 years to 5 years are going to be even greater, so that your experience with these documentation necessities is less and less, that the automation to be able to get those documentations with approval from you, of course, will be greater, and therefore your work in the process less. Now, does that take you out of the picture? No, because you still have your local person, your Malibu Funding person, your Joe's Loans, your Acme Insurance and Loans person, able to answer questions at the phone call or at the visit or at the email. And these are the most important things when you're trying to go from A to Z in terms of getting a loan. Okay, so the banks are seeing the largest deposit plunge in 4 decades. We've talked about the debt-income ratio issue when you're getting a loan. Well, think about that on a bank level. We've had a lot of discussions because this year we've had many bank defaults. A couple of the largest bank defaults in the history of bank defaults in the U.S. have happened this year. What happened and why did that happen has a lot to do with the same thing that you're trying to do when you're getting a loan. The documentation, the need for money, where does the money come from and how readily available is it in order to get, i.e. the guidelines or the criteria of each individual lender. In the case of the banks defaulting, one of the main aspects was run on the banks. I need my money now. I'm going to the bank. I'm taking out all my money times 100,000 or 1 million depositors. Now you've got problems. Well, the U.S. have seen that over the last month at the rate of the largest withdrawals that they've seen in 4 decades. Now, how does that affect you? Okay, so each individual bank that lends money, and that's really what banks do in general, lend money. Mortgage money comes from larger banks to, mortgage brokers. Buying and selling of money is a whole business. But with money, it's about, for depositors, you can borrow 10 to 1. If I'm Bank of America, if I'm Wells Fargo, if I'm Citi, if I'm Chase Manhattan, JP Morgan Chase, the amount of money I have in deposits, I can borrow 10 times that amount of money. So less deposits means I can lend out less money, which means there's more demand on that money, which means the price and the cost of that goes higher. So as depositors take money out of the bank, and as I said, this is the largest net deposit negative, meaning money taken out of the banks in 40 years. It's actually hurting you as the borrower. As crazy as that might sound, that's what's happening. And most of these defaults of the big banks are because people get scared and want their money out. Happened at Frontier, happened at all of these banks this year, how it happened. So in doing some research for this week's show, I wanted to know what was the easiest, fastest way. I always talk about home ownership as the easiest, fastest way for you to be able to get rich, be wealthy, retire happy, pass something on, build equity, wealth. All of that is home ownership. Well, there's a guy, yes, there's always a guy, Jaspreet Singh, who's in Minority Mindset, that's his particular company, and he talks about 3 different things, and they're kind of intertwined in terms of how do you build wealth. I mean, I was nobody. I didn't have money behind me as a kid. And when I grew up, I had even less. Started out as a worker at a restaurant, like a lot of people, and moved my way up until today that, I've built built my own little empire, and soon enough be ready to retire. Everybody knows I'm almost 70, so that's what you do when you get to this age. But this guy has some great things, and I want to share them to you quickly. Getting rich is simple, 3 steps. Number 1, spend less than you make. Now this, to me, being from New England, and they call it Yankee cheap, that is how the country should run. And all of us who have bills to pay know that if we don't pay the bills, there's a problem with our credit and foreclosures, and things get worse. So we always tend to spend less than what we make. We don't spend on credit cards more than what we can actually pay if we want to maintain or build wealth. So number 1, spend less than you make. Number 2, work to earn more money. A lot of you out there are sitting there at your job and forget that on a yearly or quarterly or whatever your timetable is, you got to ask for more money. Now, there's plenty of side hustles that we all do, right? We never want to upset the boss. I mean, the newer generation maybe is a little different, but if you're of my generation, maybe the one next to me, you're not really comfortable rocking the boat or asking for more money. But that's your worth. That's what you got to do. So number 1, spend less than you make. Number 2, work to earn more money. Ask for more money. Number 3, invest in what you don't spend. A lot of people can put money in the bank but have no idea what to do with it as an investment. That's where you need professional help. Get professional help. Don't let the money wander and squander in the bank, because it's not a way to build wealth. But at a certain amount of money each and every month, you absolutely can get yourself there quicker than you could if you don't do these 3 steps. Anyway, I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody, and Jeff Barton, your voice in the mortgage industry. If you're listening to the show right now, hopefully you're listening to it on KCAA, our great radio partner in the Inland Empire, but you could be listening to us on many of our podcasts. Darryl, do you have a list of those podcasts?
I sure do, Jeff. It's
Excellent.
Apple Podcasts, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, and Podclips.io, and of course, TheMortgageVoice.com.
Excellent. Podclips.io. If you're looking for a central place for your podcasting wants and needs, I mean, hunting around the internet to find a topic and a podcaster that you want, usually you see them and you go, oh yeah, I want to follow them, but you don't know where to go if you're just browsing or want to know what exactly you can listen to. Podclips.io, great place to go to. I go there for my own, look, if I want lifestyle or health or finance, which is what this program is listed under, or sports or any number of other podcasts, that's a place to go, podclips.io. Now, I am Jeff Barton. This is The Mortgage Voice. Thank you very much again for listening to the show. This time of year, what happens to mortgages, what happens to real estate prices, because we're rounding in from the spring buying season, which really didn't happen this year because of the scarcity of product. And we go into the summer, which really is the more competitive area, because by August, if you're going to move because you have a job change and you have a family, you got to do it by then. So this time crunch between June and July is when you're going to buy your house. Are there houses available? Not really. I mean, there are, but there aren't. I mean, the price of your property, of your houses, if you were in a neighborhood that was descending in price, it has now done the reverse. We're looking at most of the markets, 70% plus of the markets in the country, that prices have begun to rise. Not only begun to rise, but have picked up the speed of rise. Some areas were hard hit for some reason at the end of last year. And I say some reason, but of course we all know it's employment, it's the rate of inflation, it's the fear in the marketplace, it's the lack of housing, and people giving up. There's a thing called quit rate in working, and they track that on a monthly basis, how many people quit. I don't know, 1.2 million a month, or I don't know, whatever the number is. It's like that when you're looking for a home too. Buyers get burned out from competing multiple offers. Buyers get burned out because the prices are too high, and they just want to concentrate on something else, because looking for a house and buying a house is stressful. Let's face it, it's not simple. It's not you're going to the store, picking up an item, and in 10 minutes you've forgotten any of the stress that you had. No, this is an ongoing thing, especially when you have needs and you got to move. And one thing, we moved studios, and I wanted to ask Daryl, if you got a second, the move, stress, no stress, how was that?
Well, there's always stress involved, you
Yeah.
know, as far as that's concerned, because of the time factor. If I had all the time in the world and I could move one piece of equipment a day, obviously you could do it in a couple of weeks.
Right.
But to keep it down as little as possible, to continue, recording podcasts and doing the radio programs that I do on a daily basis, had to move fast.
Right.
And,
Right.
yeah, I'd say all the functionality is here, but I haven't gotten all the bells and whistles, the extra stuff put in yet. So more to come.
Yeah, no, I thank you for that, because I think anybody who's done the move, whether it's a house or a business, knows that there's so much to do, and you still have to maintain a schedule, and that schedule is your life. I mean, you've got a job, you've got people you got to, answer to in terms of doing the shows, and if you're moving a house, I'm talking to a person doing a loan back east, and these people were having difficulty getting a loan with Rocket Mortgage, and they were just beside themselves because of the stress they were under, not knowing whether or not they should give notice to their landlord about the rent. Should they, reroute the kids in different schools? It's just a lot to consider when you're doing that. So the house hunting process is not simple and not easy. Did you want to say something?
No, I was just going to say that, my wife refers to this as Studio 5.0.
Exactly. Okay, so for those of you who don't know, Daryl and I have been doing this show for a number of years, and we've been at several locations. Yeah. 5.0, yes. And by the way, I like 5.0 the best so far.
Me too.
It's just, it's a bigger studio. We have windows that we can look out into greenery, which I'm sure at the end of the year will be brownery, but still, it's beautiful and really, really nice to be back and relax and home. And for those of you also out there, Daryl has a wonderful album and CD collection, which is, something you just don't see anymore. I mean, I saw a statistic in one of the trade magazines, the music trade magazines, that CDs have once again outsold, not cassettes. Could it be cassettes?
No, probably
no,
not.
probably albums, right?
Vinyl,
like
yeah.
vinyl, right? And anybody who streams music is thinking, what are you talking about? I have no idea. Buying? Why would anyone buy? No, you're on a subscription. Yes, I know. But people of a certain age liked to own things. And certain things in certain eras evoke a different sound. For instance, the album is completely different sound than the CD or the tape deck or, streaming. So the nostalgia buffs and one of my children actually they're 23, 24 years old, so they're not children, love vinyl. Went and bought the, 1950s drop-down needle vinyl player and bought some albums. So I understand nostalgia. I wish home prices and mortgage prices were like they were back in those days, and that people were able to buy homes. There are some interesting statistics that the Bureau of Labor Statistics came out with about home ownership, and I thought I'd share those with you because it's just an interesting way by which we as a country have historically as well as currently, and really there hasn't been, we talk about change left and right, people getting up in arms and all the things, but when it comes to the basic things that you do in life, there's not a lot of change era to era. Percentage point here and there. Let me just go. So the 2020 census data came out. Now, granted, that was 3 years ago, but it takes a while to get all this stuff compiled and into a form that we can, talk about. And one of the things that I enjoyed about it was the homeownership rate. Now, homeownership rate today versus 10 years ago, a couple of percentage points either way. But it stands in 2020, it may be a little bit different now, but at 63.1%. So 63.1% of all people who live in America own a home, or their family owns a home. It's pretty amazing, isn't it? The other thing is, let's see, by age group. And this is also important because it affects, if you're out there and you're in one of these three age groups, there's hope because there's a growing number of people in certain age groups as you get a little bit older that own a home. The 25 to 34 age group, 25 years old to 34 years old age group, the home ownership percentage is 38.3%. Now that seems okay to me. That seems like, okay. So, if you're a 25-year-old and you own a house, that's amazing. Even if you're 34, well, that's when most people start buying a house. So in the next age group, 35 to 44 years old, 57.3% of the people own a home. So this is the age group by which you start thinking about, okay, I have got kids, but what do I have if something happens to me for the kids? You got to own a home, got to be able to build equity, got to start thinking about the future and my own retirement. The next age group, which is one of the largest age groups in terms of percentages, especially in working age groups, the 45-year-old to 54-year-old age group, 67.1% of the people own homes. So between those three groups, by the time you're 54 years old, 67% of the people in your group own a home. That's a lot of people. That's over the national average of 63.1%. And of course, anything above 54%, it's 70% of the people own a home. So if you're thinking, and this stretches across, decades of doing census data. This is not just this census data, which is an outlier. No, this is really what is across many decades. So building home equity, owning a home, paying down your mortgage is the single best way not only to build for your retirement, but also to be able to build equity in your home, leave a legacy for your children, be able to have money in the bank, which is money in your house, as the years roll on. So home ownership at any price is worth it. I'm Jeff Barton, your voice in the mortgage industry. Really appreciate you listening today, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.
KCAA and KCAA Internet Television, the station that leaves no listener and no viewer behind.
Tahi Boutique Club's original